Canberra for Cam's Mortgage Minute on Tuesday, January 22nd. Hey, today we're going to talk about title insurance. Title insurance is usually an afterthought for most people getting a mortgage. However, it's becoming more of a decision point for many lenders as they're now requiring it. The purpose of title insurance really is to protect you if there's a problem with your title. Examples would include ownership disputes on your property, there'd be title fraud, undischarged liens, encroachments, zoning issues, survey problems, property tax arrears, and so on and so on. Basically, the lawyers, real estate lawyers nowadays regard title insurance as a critical component and will usually not close a purchase without it. It protects everybody involved. And no, lawyers don't get big kickbacks for pushing title insurance. Lawyers actually are not permitted to get referral fees or commission on title insurance at all. So lawyers recommend it because it protects the homeowner, and of course it helps limit the lawyer's liabilities, which makes the closing way more efficient. There's two basic broad types of title insurance. There's homeowner policies, which cover the homeowner, basically last as long as you own the property, and are priced based on property value. The lender policies basically protect the lender's interest in your mortgage, last as long as you have your mortgage, and are based on the mortgage size. Roughly, title insurance starts anywhere between $150, can range to about $350, and sometimes can climb up from there as well. And once you pay title insurance, you can avoid paying for it again. Here are some cases where that would be true. You purchase a homeowner policy and stay in your home. Homeowner policies generally cover your property, like I said, for as long as you own it. You pick a lender that doesn't require a lender title policy. Again, as I mentioned, many of them do nowadays, so it's going to be pretty tough to find one that doesn't require it. You refinance or choose a lender that pays for its own mortgage-only title insurance. There's a few of those, not many, but there's some. Or you switch lenders and your existing policy is ported to a new lender. And again, when you're doing that sort of a thing, loan policies for lenders are transferable when the original mortgage is not discharged from title and it's simply being transferred by way of a registered assignment of mortgage. In other words, the original mortgage security must remain unchanged and no additional funds can be advanced unless provided for under the original mortgage terms and conditions. Like I said, there's lots more points that come up about title insurance. These are just sort of the basics, just so we have a general idea of what its purpose is, what it's there to do. So in a nutshell, it's designed to protect you, the homeowner, against, like I said, a myriad of surprises that can occur, because sometimes you do hear about those horror stories. Something has happened that's with the title, people are suddenly worried. It's designed to protect you and give you peace of mind, which certainly in the long run is well worth it. Anyway, it's been Cam for Cam's Mortgage Minute. I hope you learned something new about title insurance. We're going to be covering this off next month in my mortgage newsletter that goes out. I'll be talking about it more in depth and covering a few more points. But for now, hopefully this information has been useful. And of course, you can learn more about it. Talk to your lawyer, whoever's handling your transaction. And again, if you are needing mortgage assistance, we're always here and happy to help at the Auxilium team. It's Cam the Mortgage Man, and I will see you tomorrow.